Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring Live, and today is Wednesday, November 4th, 2020, and we again find ourselves in the final hour of the trading day. My favorite time to trade because at the end of the day, the large financial institutions come in. They are the one controlling the price at the end of the day. I believe there is an edge to be had by following the large financial institutions over time. During the day, the day traders and the algorithms move things around, but I mainly consider it noise. At the end of the day, the large financial institutions come in with size. They're buying and selling a lot of stock, and they take control away from the day traders and the algorithms, and they move it at the end of the day. And like I just said, I think there is definitely an edge in following what they do at the end of the day. So thank you all for coming. I really appreciate you being here. Interesting day today. But first, I just want to tell you how much I appreciate everybody being here. I hope you're enjoying the podcast. I hope you're learning something. I really look forward to seeing everyone, and I'm really grateful that we have a great group. Okay, well, currently the Dow Jones is up 555 points, up 2.1%. The NASDAQ, unreal, up 452 points, up 4.06%. And the S&P up 92 points, up 2.74%. So what a day, especially with all the unknowns with the elections, but the market liked it anyway. I think the clear winner of the election was definitely the QQQs, the NASDAQ 100. So here's the plan for today. First of all, we're going to run the U.S. legal disclaimer. Secondly, we're going to come back, take a look at my current positions, talk about when I bought them, why I bought them, how I'm going to manage them moving forward. Have had a couple day trades today. I will share those with you. Then we're going to go over to the board, take a look at your trades. I see a lot of green over there, so that is fantastic. After that, we're going to spend a few moments and we're going to talk about trader psychology, most important part of trading, in my opinion, developing a skill of putting a plan together. And then the more difficult part is to follow the plan. So I'm hoping that each day we talk a little bit about trader psychology, that it will help to ingrain the importance of trading psychology into your psyche, into your brain, right? So after that, I have gone down through my watch list. I have gone down through Kamal's, the results of Kamal's scanner. I do have 3 requirements whenever I'm looking to enter a trade. The first requirement, I need to look for a confluence or combination of indicators lining up on multiple time frames. That's number 1. Number 2, I need to have a good risk to reward ratio. I can have a great setup, but if I don't have a good risk to reward ratio, then I can't take the trade. And then number 3, always make sure you take a look how much account heat you have on at any time. That means how many positions, what percent of your capital you have on at any one time. Anytime you have capital on, it is risk, right? Make sure that you do not have too many correlated positions, and make sure you position size based upon the current market's volatility. It's very important. So those are the 3 requirements. I'm going to go down through the list. If I find something at the end of I'll go down through each one, try to narrow them down to the very best setup with the best confluence of the signals, the best risk to reward ratio, and then keeping in mind, of course, correlation and so forth. So if I find something at the end of the day, I will buy it. Then when the market closes, if anybody has any questions for me, need clarification on anything, please let me know. I'm happy to answer that for you. If there's any stock symbols that you would like me to look at before the market closes, I'm very happy to do that. Just put an asterisk and an emoji in so that I know that it's time sensitive. And then lastly, if you have any new entries or exits today, if you could please wait till the close of the market so that I'm done trading, I'm done teaching, and then I'll have all the time we need to get those all taken care of. All right, so that's the plan for today. Everybody hold on for that U.S. legal disclaimer, and I'll be back in about 40 seconds. Thank you. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. All right, let's look and see who is here today. Talal is here. Hello, sir. Good to have you here. Nice to see you. Hope you're having a good evening there in Kuwait. Bob is here. Hello, everyone. Hey, Bob. Good to see you, my friend. Hey, Steve Burns. Always an honor and a privilege, Steve, to have you here. I really mean that, and I'm sure everyone else agrees with me. It's always great to rub shoulders with the great Steve Burns. Steve says, what a rally. Boy, I would say unbelievable. I was really concerned yesterday. And again, I want to kind of really reiterate that I always talk about looking at risk first. That's why I made some of the decisions that I did yesterday, because of risk. As it turns out, it went the other way. I'm still happy with it. I had long positions, but sometimes, like with earnings and so forth, it's a bit of a gamble. It's an unknown, and I felt like last night was an unknown. So Dan gives a peace sign. Hey, buddy, good to see you. Hope you're doing well. Jatin is here. Hello, good afternoon, sir. Good afternoon to you as well, sir. Thank you for coming. Kamal, hey, buddy, good to see you. Good chatting with you today, and thanks for the results of the scanner, and nice trading today, by the way, as well. Talal says, congrats, Kamal, for the SPY. I know, Kamal is the SPY, is the SPY master. I think he's done the SPY trade one time. He's batting 1,000. The real question whether or not he will continue, and I don't think he's going to, but who knows? Johan is here. Hello, sir. Good to have you here. Hope you're doing well, my friend. Frank is here. Hello, Greg and group. Hope you are doing well, Frank. Glenn says, hi, Greg. Hi, Glenn. Good to see you. Kamal says, Talal, I made $4. Yeah, but he only bought one share. He made $4 on the overnight SPY trade. That's massive. Steve says, look at the VIX chart, volatility crushed. Yes, it absolutely is. Let's take a little look-see over here at the VIX. Oh, I'm looking at the wrong VIX. Look at that. Volatility all came out. All came out. Good job, Steve, on selling those puts when you sold them. That is for sure. A few days ago, if I remember correctly. Johnson says, good evening. Hello, Johnson. Nice to have you here. Here is the lovely Ava. Hi, Ava. Good to see you. Happy day to you as well. David is here. Hi, Greg and group. Hey, David. Good to see you, my friend. Hope you are doing well. Dan says, oh, man, SPY trade. I think Steve once wrote the difficult trades to take can work. Congratulations, Kamal, on the SPY. Absolutely, 100%. Miko is here. Hey, buddy. Good to see you. Hope you're doing well. Hey, John. Good to see you. Put call ratio looks like market down 1,000 points. Skepticism, $60,000 put guy looks like still long. Wish him luck. Oh yeah, that's the guy that bought the 60,000 puts expiring in April, I think. Steve says, not so hot tamale for short sellers. Not so hot. The tamales are definitely not hot. Let me look at the put call ratio. Oh, here. Come down, yeah. Glenn says, best time to invest is between November and April. Yeah, those are definitely the months. Those are definitely the months, right? I think in the Stock Traders Almanac. Kamal says, I'm going to quit while I'm ahead on that SPY trade. It was purely a fun trade. Yeah, and you can now say I've never lost on an overnight SPY trade. Jatin says, almost the same setup on 2016 election charts. We had discussed about it, sir. Insane rally. 100%. Hey, Frank has a poem for us. Let's take a look. Let me paste this on here. I'm sure this is going to be good. Okay. Trade the market in front of you, not the one you want to see. That's true. For a trader to know what will be is not how it works. You'll agree. So stake a position with care because risk is another word for dare. Oh, wow. Man, this is so good. And this, I mean, this first sentence here, trade the market in front of you, not the one you want to see. It's so true. I mean, short and to the point, but trade the market in front of you, not the one you want to see. For a trader to know what will be is not how it works. You'll agree. For a trader to know what will be is not how it works. You'll agree. Yes, we do not know what is going to happen. So stake a position with care because risk is another word for dare. Holy smokes. Imagine if somebody says, hey, I dare you to take that trade. Has a whole different feel to it now, doesn't it? Wow. Thank you, Frank. Fantastic. As always, my friend. Really, really, really just brilliant. Just wonderful. All right. Well, let's get to it. Berkshire Hathaway. All right. David and I did buy Berkshire Hathaway back here at 201.42. Under 30, over 30, under the 200, over the 200. Tested this 200 3 times. Yesterday we had a big day. Not yesterday. The day before had a big day. Hit profit targets. Yesterday had a big day. Hit some profit targets. Yesterday I took off half of my position because I was concerned about risk with the market. So I took off half of my position here. I did hit 2 profit targets today, one at 207.90 and one at 209.81. It has rejected the 50 RSI today, so that is a signal for me with coming from an under 30 over 30 to go out, and I will take and lock in another half a position. But so far so good. From entry to current price, 3.12%, although I did not make quite that much, of course, because I scaled, but I can't figure that all out right now. So DIA, well, this is pretty unbelievable move here. I did take DIA at 266.24. The under the 250, over the 250, under the 30, over the 30. It's just moved up like crazy. I was fortunate enough to hit 4 profit targets today, which is pretty unreal. One here at 276.23, one at 278.29, one at 280.35, and another one at 282.44. It is over the 50 RSI and holding, and it is over the 50-day moving average and holding. So I will keep this. Oh no, I'm sorry. See this pink line up here? This is where I did my math to get out of the trade. I am going to get out of this trade. I forgot I got that mixed up with another one. I am almost out of shares. When I hit this last profit target here, I was running on fumes on shares. So I will sell just the remaining portion that I have today, and I will be done with the diamond because the way I scale out, this is what I picked as my max or my ultimate profit target, and we almost got there. And once you get there, you run out of shares. So I will be getting out of SPY today. CarMax. All right, I did buy CarMax back here at $89. And Gary also is long CarMax, but he sold November 90 calls for $235. So, and he sold half, so he has half the position. I did sell half the position yesterday, again, because of the election the next day. And I was happy to do it right there to not hit a profit target yet today. Now, I did not take this with an under 30 over 30. I took this with an under 200 over 200. So when that happens, I'm not too worried about the RSI or the 50-day moving average. So as is, I'm just going to keep it. It is down a little bit today, but I am glad, of course, in hindsight, that I took half of this yesterday. So I will just be keeping this because I played it off of the 200-day moving average. The SPY. All right, we talked about this yesterday. I decided to not take the SPY trade yesterday. I guess I should do this. Sorry. Oh, here we go. SPY. Most of the time I take the SPY trade. I do it because of a long-term back-tested study from Liz Ann Saunders, At Bespoke Invest since 1993, two approaches. First approach, buy the SPY at the open each day, hold it all day, sell it at the close. This approach done every day since 1993, negative 13.9% return. The opposite, the one that I use, buy the SPY at the close, hold it overnight, take the overnight risk, take the election risk, sell it first thing the next morning, positive 634.2% return. Past performance is no guarantee of future results. Doesn't mean because it's worked in the past, it's going to work in the future. But if I'm going to allocate money towards something, it's going to be something that has good back-tested results, like the blue line, not the orange line. So if you're considering using this, I would use a very small position size, maybe like 5% of your capital. If you have $50,000 trading account, 5% of that is $2,500. So you buy $2,500 at the close and hopefully sell it first thing the next morning for a little bit more than that. But that's not how it works. It's not a high winning percentage kind of situation. So that being said, I did not buy this. I was concerned yesterday because of the election. And, I had Berkshire Hathaway, I had the Dow, I had CarMax, right? So I had other positions. But Kamal stepped up yesterday, bought at 336.03, and like a champion, look at this massive gap up here. 341, I think, is that what you told me? 341. So that is 336 to 341, $4 trade. Fantastic, my friend. I wish I would have been there with you, but I decided not. Oh, and also I bought puts on the SPY expiring Friday. I got out first thing this morning. Luckily, there was still a little time left in that, so I did get out of those. So I am out of those, and that was a loss. And then Kamal, I think, is one and done with the SPY trade. Okay. Okay, VIX. Here's some day trades. I did buy VIX here with this higher low V1 back in the value zone. MACD was green, but we also went under 30 and over 30. That was my entry. My close would have been a close below the 30 RSI. I bought it. It just moved sideways, sideways, sideways. I finally got a nice big up thrust bar. I sold half of my position here at 22.72. And then it followed with another two with a nice big climax bar up here, rejected the third ATR channel. I sold another half of a half there at 298. And good thing I did, because 10 minutes later, kaboom, went right back down to, went right back down. Yeah, here. Now can't move the line. Anyway, back to break even. So it was a profitable trade. I bought at 22.54. I sold at 22.72. I sold at 22.98, and then back at 22.54 with that remaining quarter. So that happens a lot. I'll get a move. It will move up. I'll take a profit. I'll take another profit. And sometimes you get the big move back down. But you can see this would have been, instead of a break-even trade, instead of a nice profitable trade, by phasing out, it would have turned it just to a break-even trade. So that's why I like to phase out. All right. Apple. I had two short trades on Apple. Here is my V1 to the downside, and I guess I should say really what got me interested in this trade was two things. Here we have a high. Here we have almost the same high. Here we have very strong MACD bars up. We came back down. We painted some red bars. Here we make basically a double top, no green bars to be found. That was my clue that I wanted to look for a short entry, because this move up, although it looks strong from a MACD standpoint, was weak. I shorted here at 115.38 with the V1 to the downside and a false breakout to the upside. Move down. Then I had a big down bar. I did take some profits at 115.08. Continue to move down, bounced off the 50, back up at 114.95. And then, just like I showed you with VIX, it ran all the way back up to my entry point. So that last quarter of my position, I broke even, but it was still profitable because I shorted 1538, covered at 1508, covered at 1495, and then the last quarter back at break even. Then I had another short. The real reason I took this trade was because I thought it would be a good teaching moment, and I'm glad it worked out. Here we had this big bar down. If we have a big bar down larger than 1 ATR, well, usually if it goes right back up to the halfway, it's going to fail. I did not wait for a trigger. I shorted right when it got essentially halfway and just right below the 20-day EMA. Had it closed above the 20, I would have gone ahead and just taken a loss. Or if any bar in the future had closed above the 20, I would have taken a loss. So I shorted at 1502. It did reject the 50-day moving average, so I took half. So I shorted at 1502. I covered at 1488. And then I never got a close over 50. I never got a close over the previous day's high. And then we had this another big bar down here, and that was enough for me. So I shorted at 1502, covered half at 1488, covered another half at 1456. So all in all, pretty good. Pretty good. Now, so I can get rid of all that. All right, let me take a little look over here and see. Steve says, that is epic, Frank. I 100% agree. Talal says, so true. Dan says, Frank, beaten it finger snap to you. Hey, there you go. That's a compliment. Frank says, thank you, Jatin, Steve, and Talal. Jatin says, sir, you gave me an insight on gaps sustaining for 3 days. Post that I brought up, that I brought ALGN at 427, 432. Thanks for your valuable input, sir. Learning many things. Yeah. If we have a gap, here's an example. If we have a gap and that gap can hold for 3 days, meaning that we don't close below the low of the gap, 1, 2, 3, the majority of time that will continue up. And it's same for the downside. If you have a gap down and within the next 3 days, you go higher than that, the high of that gap down, there is an edge to trading this approach. You can see in this random example here, this did not work out. It did gap, it did hold here, here, and then here it lost it. You would have had a small loss, but I'm very glad, Jadon. I'm glad that helped. Kamal says, if you want to look at a 30 to 70, look at IBB. Yeah, I'm going to look at IBB in a minute, Kamal. I have it on the list. Steve says, is the IBB chart even for real? Steve says, I have an IWB and a DOC 10-day, 50-day EMA crossover. Okay, well, let me write that down because I did not look at the IWB, and that's at 10, 50 EMA, and then DOCU is also a 10 and 50 EMA. Well, thank you, Steve. Those are ones that would not have been on my radar. Steve says, Facebook has a 520 crossover I am not going to take. Steve says, I have a 520 EMA, a 1050 EMA. Crossover as well. Good. So we'll look at those. All right. Let's look at current positions here. Frank held on like a champion, back in the money on the Qs. Holy smokes. That was a long ride down, but you must have been happy last night when the futures went up. Good for you, Frank. My gosh. 284.60. It's at 286.80. So congratulations. I know you're probably kind of bummed you sold your Apple, but you know, that's how it goes. But you still have your Qs. So fantastic. GDXJ, yes, bought GDXJ at 53.20. Moved up nicely the last couple days, but today, bump down. So the metals are not responding. So it is down 3.12%, but yes, is still up on the trade. TQQQs, okay, this one should be interesting. Gary bought up here at 139.11, but he sold November 6th, 131 calls for $1,120. So what that means is his stock is back in the money. I probably down, however, on his calls because of the time still left to the 6th. So that should be interesting. So, he sold at 131, so he cannot make any money above 131. So it's like a stop, not a stop loss, but a stop profit, because after 131, he doesn't make any money. He makes the money on the stock, but he loses it back on the calls. So this expires on the 6th, so that should be interesting to see how the numbers work out on that one. LVGO, okay, this is Frank's position. This thing is not trading because of a merger. He bought it back here, 132.50. I hope when it starts trading, it's going to be much higher. Intel, Gary sold the November 20th 45.40 puts. Well, hey, we're back above 45. So that is fantastic. This needs to hold above $45 by November 20th in order for Gary to make the difference between the spread of the 45 put that he sold and the $40 put that he bought. PLTR, David bought all the way back here at $9.43. He sold half right here at the top like a champion, and he still has half. I imagine it's up 1.9% today, but a beautiful trade there. Kamal, man, I knew I liked this dang trade. I would have taken this trade except for the election, but I'm glad Kamal has it. Kamal bought it at 228 even. It's up 3.71% today, and even better, Kamal sold a third of his position at $238. So like $1.62 higher than it is now. So fantastic trade there, Kamal. Beautiful, up 3.65%. Fantastic. Oh, SPY we already looked at. And then, oh yeah, Gary doesn't have Exxon anymore. So real quick, I'm going to take a look at current positions. Berkshire Hathaway, I am getting out of half because it rejected the 50-day moving average. I got out of half yesterday. I'm going to get out of another half, giving me just a quarter position. DIA, this moved up so much from entry and all these profit targets, I'm almost essentially out of shares. So I will clean this trade off. That was a wonderful trade. CarMax, it's going to lose the 50 RSI, looks like here. So I will sell another half. I sold another half yesterday, and then I will keep that just a quarter, just kind of a runner position. SPY, I am going to buy the SPY today. Hopefully Lizanne will forgive me about yesterday's transgression of not buying, but she's the one with the last laugh because it gapped up nicely. Okay, Glenn says back in RBA with a move over 65. Oh, okay. Remind me at the end there, Glenn, okay? And I'll get them all up there. Frank says, as in my custom, I did keep 10% tracer on Apple. Oh, good. For the long term. Wasn't sure you wanted to track it. Well, I'm glad, Frank. I'm really super glad to hear that. I'm sure we all are. All right. Listen, just want to talk a little bit about trader psychology before we move on. Look for our end of day trade using our 3 requirements: confluence combination of signals lining up, ideally on multiple time frames. You have to have a second number. You have to have a good risk to reward ratio, at least 2 to 1, 3 to 1, 4 to 1's better. but minimum of 2 to 1. If I'm going to risk $100, I want to make 200 or more to the upside. And then number 3, let's always keep in mind how much account heat we have, how much risk we have, how highly correlated our current positions are, and whether or not taking a new trade is just going to make our positions even more correlated, or if we're maybe get outside of equities like gold, bonds, silver, oil, something like that. This is from Anthony Crudell, at Anthony Crudell. He's over on Twitter. He's a famous trading coach, has a great channel over there, posts really good information. So if you get a chance, go over to Anthony Crudell over on Twitter and subscribe to his channel. It's a really good one. Trading is about having some good and bad days, but how good is your bad, right? How good is your bad? This is something I work hard on. I turn things off quickly when the bad is happening to make my bad a little better. Making my bad better has been in some ways more profitable than making my good better. Does that make sense? We're going to have good and bad days, right? We're always going to. But what Anthony's talking about here is working hard on making those bad days not as bad, less bad. Imagine how much money you'd make if you never had losses, even if you had small wins. It's just those dang pesky losses. So, how I look at this is when Anthony is not trading well or things are not going his way, and he's having, quote, a bad day, he turns things off, whether he's actually turning off the screen or just walking away or just not taking any trades. But we're always concentrating on making money. But I think he's spot on here when he talks about trying to make bad days just not as bad. So think about that. Think about that in the future. If you're having a bad day, how can you make it less bad? Turn off the computer, trade a much smaller position size, be extra patient, really get a hold of your feelings and emotions, right? So anyway, thank you, Anthony Crudell. I really like this post. It helped me, and I hope it helped everyone out there as well. Frank says, waiting for LVGO to convert. Talal says, V2 on weekly AAP, but there's earnings in less than a week. What's your opinion? That's on the 10th. Well, honestly, Talal, my opinion on this is I probably would not take this trade. Here we make a lower high, and we did not wash out this low before we took this V2. And also, if I buy a weekly bar, Talal, most likely I wait until Friday. I wait until the end of the day or end of the week bar. Just like if I bought during the day, I wait till the end of the day to see how that end of day bar works. But I'm not thrilled about the setup here because we made a high, we came into the value zone, we made a lower high here than over here. When that happens, I like to have that low washed out to reset things before I would take the trade. So anyway, I hope that's helpful. I mean, this is looking strong today, but you have this big bar down over here. My guess, when you get halfway back to this big bar, you're going to get stuck about right here. From here to here is less of a gain than from here to here, which would be your stop loss. So, like I always talk about, the risk to reward does not make sense to me. All right, let's take a look here at some potential entries. Okay, so this is Intel. It went under 30, over 30. I don't like it. I hope this keeps going up for Gary's sake. I don't like it because all it is an under 30, over 30 that had to move a long way to get there. So I am going to take Intel off the board. TSN. What we do have with TSN is we have a double bottom with the bullish divergence. Here's a low, with deep MACD bars. We rally into some green. We come back down. We are lower, but see how shallow these red bars are compared to how deep these are? That is called a double bottom with the bullish divergence. And when that happens, you need some kind of signal. Well, this is a V1 here. The only thing about this, the best double bottoms and bullish divergences come when they're with no longer than 30 days. This looks longer than 30 days away. So the further these double bottoms are away with the divergences, the less they mean. So with that said, I am going to take TSN off the board also. MasterCard. MasterCard does backtest well. Let me show you over here. I am using this with permission of etfreplay.com. A close under the 200, close over the 200. Since 2000, it has returned 798.8%. Buy and hold returned 1,251. However, the drawdown was 62.7%. Here, the drawdown was only 28.6. So it made less than buy and hold, but it dramatically lost less than buy and hold. So, oh, sorry. Let me see if I can. Come on now. There we go. So I am considering buying MasterCard. It gives me a very distinct stop loss here. There's this confluence of the 200-day moving average and the negative third ATR channel right here. So essentially, if it closed below the 200-day moving average, I would just go ahead and get out. If it holds above the 200, I'll go ahead and scale, do all the stuff that I do. But I do kind of like MasterCard. I like the company, and I like that we went under Did we go under 30 yesterday or close over 30? Yes, we did. Oh, that would have been a good buy. But we did go under the 200, back over the 200, under the negative third, over the negative third. So that is definitely one that I'm looking at. PayPal is very strong. Yes, it's a V2. You have a big, massive gap. You got stuck right at the 50-day moving average. The risk to reward just does not make sense to me on this one. SINA. V2 and a false breakout from this low. So here's day 1, 2, 3. Day 2 washes out day 1. Day 3 closes above day 1's close. We got stuck right here where it got stuck all the rest of the time over here. And we've made a new high here. MACD is not green. Dr. Alexander Elder would be, concerned about that. So I don't like the risk to reward, and I don't like the bearish divergence. Okay, BIIB, we were talking about this earlier. This is a perfect example. When I looked at Kamal's scanner, it scores how many confluences of signals it has. I think it had one of the highest, let me see if I can find it. It had one of the highest scores I've ever seen on the scanner, 32. Kamal, have you ever seen higher than a 32? It has 16 on the weekly, 16 on the daily. But just because you have a huge amount of confluences of signals, again, you have to factor in the risk to reward, right? I mean, this has the highest confluence of signals. I mean, we could just count them, under 30, over 30, 520 crossover, under 50, over the 200-day moving average. All sorts of stuff over on the weekly. Same thing. No wonder. But where is your risk going to be on this trade? Is it going to be halfway? That's a big risk to the downside. And how far can this thing go to the upside? That's, here's the last place it went. So, I'm definitely not interested in this. Congratulations if anybody has this. It's up 42%, over 42%, but a good example of fantastic confluences of signals, but not a good risk to reward ratio, so I have to let it go. I hope somebody had that. ALKS, close above the 200-day moving average. It already rejected the 250, rejected the 100-day. We had the big down bar over here. We got right to about halfway, so I don't like that. Mass Tech, it's just too far extended. It's a bullish engulfing bar, which is fantastic. It's just too far extended for me. OII, Oceaneering International, bounce off the 50, that's about it. Roku has a false breakout to the downside and a V2, day 1, 2, 3. Day 2 washes out day 1, day 3 closing above day 1's close. Looks like it has earnings tomorrow, has a gap here. Yeah, I'm just not going to mess with it because of earnings. XLF earlier in the day did have a 520 crossover. I did backtest that. It does not backtest well, so I'm going to take that one out. Wix, a false breakout to the downside with the V2, but a big, massive gap and already a rejection of the 50-day moving average. Chevron has a higher low V1, but it's only the V1 happens after only one down bar. See how we went up, 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 just one down bar, then we had a V1. So I prefer when you move into the value zone, you have a couple days down at the minimum, and then you have the V1. So Chevron, no. Bristol Myers Squibb, holy camole. Look at this. All sorts of stuff going on here. It's a 70 RSI, just does not offer me a good risk to reward. XLV, same. It's already rejected the third ATR channel. I mean, could it keep going? It certainly can. I think the chances diminish after a move like this, so not interested in that. Real estate had it close under, close over the 200 yesterday. I mean, this one's not too bad. You have a V2 here on the weekly. Rejected the 1 ATR channel, so I'm just going to take that one off. Disney, I'm waiting for a crossover on Disney, 1050 EMA. It's not there yet. So far, I like MasterCard the best. Now, let's look at IWB that Steve mentioned, DOCU that Steve mentioned, and QQQ. Man, Frank, I'm glad you had 10%, buddy. Okay. Oh, these are EMAs. Oh, here we go. Nope. IWB. As Steve said, it does have a 520 EMA crossover. That is valid. Let me run some numbers real quick on this. It's in a decent area as far as the ATR channels are concerned. All right, but you see we do have a 1050 EMA crossover here. So this is a crossover trade. This is more of a trend trade. Let's look at DOCU. It also has a 1050 EMA crossover. Still within the tolerance. I don't buy any higher than the second ATR channel. So that one is possible. It's a little extended though. And then the Qs also has the under 50, over 50, 1050 EMA crossover. So, you know, let's put these side by side and see. Qs has rejected the 1 ATR channel. It's up 4.55%. DOCU is up 12%. That one just seems a little chasey to me. And then IWB is up 2.39%. Also rejected the 1 ATR channel, up 2.29. So the Qs, you know, these are all valid. These are all valid. I think personally I'm going to go with MasterCard just because the risk to reward is more defined for me than, and it's less extended than the Qs, IWB, or DOC. But the Qs, the IWB, and DOC with the 1050 EMA crossover do backtest well as far as a trend trading approach. Doesn't mean they're going to this time. Hope everyone realizes that. Me personally, I am going to buy MasterCard here with this and have a stop with the 200-day below. Okay, let me take a look real quick and get this business done. I guess Berkshire Hathaway might close over the 50. We'll give it some time. Okay, I just sold my CarMax, half of my CarMax, and now I am going to sell the rest of my DIA trade here because I'm running out of shares. Okay. I think just to make things easy, I'm going to go ahead and sell my Berkshire also. Okay. Jadson says, Google is one such stock which respects technicals very well. One can observe its movements from the shakeout bar of 19 and 28 of October. Typical shakeoff with no follow-up, simple setup. Gary says, hello, Greg and group. A little late to the party. Thanks for coming. Better late than never, Gary. Kamal says, Steve Burns equals Mike Monster has earnings tomorrow. We'll buy it. Hey, we'll buy it. I like that name. What about UVXY retracement back to the 20 with instability? Well, you know, we had the move from here to here. I would have expected it to hold at the 50% retracement. Now it's lost it. I don't like it there. Oh, by the way, I forgot to mention, this chart's so messy with my VIX trades. I did get out of my VIX at break even here. Was about up here when it happened, but I did buy VIX here at 22.42. I bought calls. I sold half when the price got to 23.97. I sold another half here at 27.53. I kept a quarter of the position as a runner. I got out right at the open. So just want to be clear on that. But that was a nice profitable trade, but the VIX has given it all back. Let's look over at the 1030. The 10 is still above the 30. You know, the back test shows that shorting the VIX when the 10 is above the 30 EMA does not back test well. Although when it gets really extended, you know, it changes things. But the 10 is still above the 30. But my plan with my VIX was sell that last 1/4% when it got close to break even, which is what I did today. So as far as UVXY, I don't. Let's see. I really don't see anything here. I mean, what is shaping up is a potential double bottom with a bullish divergence. Here we have a low with deep MACD bars. We had a nice huge move up, deep MACD bars. Now we're getting close to testing that bottom with no MACD bars. So, you know, that is what Dr. Alexander Eller calls a double bottom with a bullish divergence, but we're not quite there yet. That's going to be a nice setup to go long back UVXY. And for those of you that don't know what UVXY is, you know, that's a VIX related product, a volatility product. So this tells me that if this setup holds and goes back up, that we'll have additional volatility in the market. But I don't see anything right now. We'll buy it. Steve says, thanks, Kamal. I didn't Google it yet. Steve says, I Googled Doc earnings date, but it is too chasey after this move. Yeah, I agree. Ava says, with MasterCard, does it concern you that it got rejected off previous support after filling the gap? A little bit. You know, we had this gap here. It rejected here. But the way that I look at this, Ava, is I just look at this as a good risk to reward ratio right now. It's up strongly today. It has the support of the 200 below. It has the support of the negative third ATR channel below. It went under 30, went back over 30 yesterday. Looks like we are going to close above the 10-day moving average, which has not happened for a while. But yes, it is a concern. It is a concern, but sometimes you're never going to find a trade that you don't have a concern about. And like the back test I showed you on MasterCard, it does back test well. And it gives me a very defined risk having that, the 30 RSI, well, not so much as 30, but the 200-day and the negative third below. I just know pretty much where my risk is going to be. And like, I would not do this, Ava, if I had not back tested this. Doesn't mean it's going to work, but you know, good thing I didn't buy it intraday that I'm waiting. But yeah, it definitely is a little concerning, but not concerning enough for me to not take the trade. Mainly just because my risk is pretty well defined. Anyway, I hope that helps, Ava. All right, so I did sell another half of Berkshire right around here. So this has been a nice one, a nice trade. I only have a quarter position left, and I'm totally fine with that. If I get a close below the previous day's low, I'll get out of that last quarter. Dow Jones, I am out. This was a monster trade. I'm really glad I hit those two profit targets higher than it is now, but I was running out of shares, so I will be taking this off the board. KMX, I also sold half here. Sold half yesterday here, selling another half here with what looks like a close below the 50-day moving average. SPYs come way down, way off the top. Yep, VIX down 9.11% today. Wowzers. And then Apple doing pretty well. So looks like for me now, MasterCard is going to be what I'm going to be looking for today. Oops, that wasn't good. All right, so I'm getting queued up for MA here. Dow Jones is now up only 395. Yeah, big divergence possibly setting up on the VIX here. My gosh, look how deep these bars are. We're almost there. If we get there, we're going to have no bars whatsoever. I will definitely be looking for a long trade on VIX if I get a trigger. Okay, Steve is long IWB at 192.73 using the 1050 EMA crossover. Steve is also long the Qs from 287.05 using the same, using the 1050 crossover. So good luck on those, Steve. And so I'm just going to wait a couple more minutes before I place my MasterCard trade. Well, this is showing you why, at least today, it's a good idea waiting for the close here, because I'm definitely getting a better buy here than I would have earlier. So I think what I'm going to do, let's see what the 5-minute bar is doing here on Master. Woo! Is that right? Yeah, it is. Holy camole. I have to make sure that's going to hold above the 200. If it doesn't, then I won't buy it. So about a minute and a half left. So the Dow's given back more than 50% of its gain. Wow. You know, it was up 800. It should have held 400 minimum. All right, 1 minute to go. "30 seconds. I'm going to pull the trigger with about 15 seconds to go. Or should I only give it 10 seconds to go? Be daring. All right. Okay. All right, so I did buy SPY at 343.54, and I did buy MA at 307.24. Okay, so I'm getting rid of Diamond. Thank you, Diamond. That was a beautiful trade. Gonna take that off the board. SPY. I entered SPY at 343.54. And MA at 307.24. So I'm underwater on that one already. And again, my stop will just be any close below that 200-day, even if it's a penny. KMX, I sold another half today. Okay, we can take Apple off the board then. All right, so there we go. So listen, if you have any entries for me today, please put them in the chat and I'll get them all taken care of. And before I do, I just want to remind everybody that I do teach private one-on-one lessons in the evening time via Skype. I have been trading for almost 25 years now. I have studied one-on-one with some really great traders and mentors and authors such as Stephen Burns, Dr. Alexander Elder, Carol Lavorne, Larry Williams. And the course that I teach to my students, the one-on-one course, is a compilation of everything I've learned from these four gentlemen. It's a very intense course. It's a total of 15 hours, 5 sessions. Each session is 3 hours. And so, you know, if you take the course with me, I know you'll be a better trader when you're done. I know you will. It's $1,000. I think it's worth every penny. I think it's worth a lot more than that. So if you are interested, please reach out to me. You can send me an email. Email's in the description of this video. You can also send me a message on Twitter. And if you do reach out to me, I'll reply and say, hey, let's get a Skype call together, say hello to each other in person. It's not a sales call, has nothing to do with it. I just want to learn about your trading and your challenges and your goals. And then it's a good time for you to ask me questions about the course. And then when we're done with the call, I'll say, hey, thanks. It was nice speaking to you. You know, think about it. And if you decide you want to schedule the lessons, just get back to me. And then if you like today's podcast, I would appreciate it if you could hit the thumbs up button. It really does help the channel, helps keep it around, helps YouTube know that there's something valuable here. And so, you know, if you did like it, only if you liked it, obviously, if you could take a couple seconds and just hit the little thumbs up button before you go, I would certainly appreciate that. Okay, so that's all my stuff. Now, let's get over to Steve's stuff. Okay, I'm going to make Frank's line blue. All right. And then here is Mr. Steve right here with, let's see, 287.05. 287.05. And that is Steve Burns. What am I doing? Okay. So this is Steve with a 1050 EMA cross. Okay. I'm going to be using that and again in a second, so I'll copy that. Okay, so Steve's in there with the 1050 EMA crossover at 278.05. IWB. Not that. IWB. Steve bought this here at 192.73. And again, that is because of the 1050 EMA crossover. Okay. Kamal sold 1/3 of PANW. Yes, I've already noted that down, right? Yeah, Kamal sold the third. Yep, very nice. Gary says, nothing new for me today. Kamal says, Kamal, nice job on the SPY overnight, 100%. On the spike trade. Not the SPY trade, but the spike trade. Johan is also in the queues. All right, good luck to you on that one. All right, what's happening in the after hours arena? Apple's up 20 cents. The SPY is up 24 cents. VIX is up 26 cents. And MasterCard's down 70 cents. But there's a $4 spread on that, so I don't take that too seriously. Wow, what a day, huh? What a day. So I'm looking here, it says winner remains unclear. Interesting. All right, so Steve has a couple new trades, nothing for Gary. Nothing new for Kamal. Johan has the QQQs. I bought MasterCard and trimmed my positions down to a quarter on Berkshire and CarMax. So that's that. All right, anybody have any questions? Anybody have any thoughts on anything? Happy to answer them. If you do, it's a beautiful day here in Utah. I'm gonna get out, go for a little hike. Okay. Well, I'll leave you off with this then. Please go out, try to do something nice for somebody today. Just a smile, a wave, a hello, a nice, kind gesture. Just tell them how much they mean to you. Something like that, you know, it'll make their day and it will make you feel better as well. And then also, if you could go out and do something nice for an animal today, that would be even doubly as good. Just take your dog on a walk, give them a treat, scratch them on the head. Tell them how much they mean to you as well. It's just something like that. But one nice thing for an animal, one nice thing for a human today would be fantastic. So, all right. Well, any other questions? Going once, going twice. Johan says, have a great hike, Greg, and have a good rest of your day, everyone. Thank you, Johan. Appreciate that, my friend. All right. Well, I think that's it. Hope you had a good day. Have a good rest of your day. Be good. Be safe. And we'll see what this crazy market brings us tomorrow. All right. Take care, everybody. Have a good rest of your day. And hope to see you tomorrow. Bye-bye. U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.